Cheap loan for down payment. In this method, we will be looking at how to make use of cheap loan in property investment. Why we are using cheap loan. One challenging part of new investors is the ability to find money for the down payment, which varies from 10 to 20 or sometimes as high as 50% or more of the total purchase price of the property. For a $500,000 house, if you need 10 to 20% to put in as the down payment, the amount needed would be around $50,000 to $100,000. The question is how to find this if you do not have that much of money. On the other hand, bankers are eager to loan you a certain amount of money, as long as you have a stable job or some asset. Bank business is to loan out money to people or business. Therefore, they will love to work with you and give you loan. Just be open and talk to them about the possibilities. Some may think loan or debt is bad. It might be true, if you loan money to spend without a plan to pay back. However, you need to know there are good loans and bad loans. Bad loans make you pay for them and become poorer. Normally, bad loans are for consumption purposes. In contrast, good loans can pay for themselves. Generally, good loans are used in good business or investment. As the business and investment generate money, it can pay back the loan and still gives you surplus. With a proper planning, cheap loan to invest in property is a good loan that can help you to create wealth. So how can we make use of cheap loan? In low-interest environment, cheap loan can be easily found by checking with the banker. You can look around and check for the cheapest rate, with longest duration as possible, normally 5 years or more. How can you define cheap here? Anything between 1 to 2% higher than the property loan interest rate is considered cheap. For example, if a normal property loan is around 2%, then any loans with 3 to 4% interest is cheap. Sometimes, it is harder to find cheap loan. You may contact loan specialist, who is licensed to find loan for you, to check out what is available. We don't recommend taking loan with the interest rate more than 5%, as it will be hard to pay the principal plus interest. To make the bank loan you money at cheap rate and longer term, you need a good credit, which is a record of your financial activities with the banks and financial institution. You can buy the credit report at the credit bureau. The credit report normally states how timely you are in repaying your loan, including credit card payment. It can rate you using A, B, C, D, or AA, BB, CC, DD. Rating with A and AA rating is the best score. If you don't have a credit card, get for yourself at least one, spend some money on it and pay it on time. This is to create a good relation between you and the bank. And it will help to improve your credit score. If you don't have any activities like that, banks will not be able to know if you are a good or bad payer, hence cannot assess your credit score. And do pay any loan you have, like study loan, car loan, etc., on time. If you have bad record of loan payment, you need to clear it by paying on time for a duration, normally about 6 months to get a clean record again. You can also use your assets as collateral, to borrow money from the bank. The eligible assets include real estate properties, stock, bond or restricted cash. Explore this with bankers or loan specialist, they can help you if you are not familiar. Once you have in hand your loan package, with the amount you can borrow, the interest rate and the loan tenure, or repayment duration, do work out how much you need to set aside, to pay for it every month. Normally, the banker will help you to do that. You just need to take note of the number. You can also try yourself by using financial calculator or website which is easy to find online. Calculator.net is one of such websites you can use. Remember, this loan is personal loan and not property loan or mortgage loan, hence you can use it as down payment for purchasing property. Do the calculation including the mortgage loan to ensure you can cover the installment for both loans with your investment property. Sometimes, banks have certain limitation in giving loan to a person. You may consider setting up private limited company to get loan. Then, this becomes a business loan. If it is a company with business activities, you will have more chance to get higher loan with better interest rate. If not, you will need to guarantee the loan personally. To illustrate the process of cheap loan, let us go through one example. Alvin is a typical business executive with a salary of $4,000. After looking around several banks, he found bank loan package that offers 6 times of his monthly incomes without any collateral, which the bank call unsecured loan. The loan can be paid over a period of 5 years at an interest rate of 3.5%, while the mortgage loan has interest rate of 2%. At the same time, Elvin applied loans at 3 banks. And he got $72,000 in total. Elvin also has a saving of $30,000. With that, he now has $102,000 to invest. Elvin put this into a private limited company, and used this money to start investing into property. After carefully studying his area, Elvin spotted a good property at a price of $420,000. After negotiating with the seller, he was able to bring the price down to $400,000. He then used $80,000 for the down payment. It is wise for him not to use the fund fully, as he would need some fund for renovation, and to make the first few payments to the banks, while waiting for the property to be rented out. To buy the property, Elvin needs to guarantee his company to get a mortgage loan of $320,000. So every month, he will need to make installment for 2 loans. $1,183 for the $320,000 mortgage loan and $1,309 for the $72,000 personal loan. So total, he needs to pay $2,492 every month. On the other hand, Elvin divided the property into smaller units, which you learn in the first strategy, and he got $3,800 rental per month. With this strategy, Elvin was able to generate a gross profit of $1,308, which is equal to the rental income from investment property, less the bank payment, which is a decent income from just one property. This is actually a real-life case that make use of cheap loan to create passive income. Please also refer to Strategy 1 to know how to maximize rental income. There are several things to note for this strategy. This is a high leveraging method. Therefore, the calculation must be done carefully, to ensure coverage of loan installment. Once you bought the property, there will be certain time frame for you to earn income, and looking for either deleveraging, meaning to reduce the loan amount, or divestment, meaning to sell away the property to make profit. If you are first-timer, it is better to ask for help from your local loan specialist. You can also email to check with us to ensure things are done correctly.